New Holdings is a financial services company helping the underbanked population in Latin America. The company has demonstrated excellent growth, but investors are concerned about the outstanding loan portfolio and how it might perform during an economic downturn. All that being said, should investors buy New Holdings stock at current prices? That's the question I'll answer in this video, reviewing the company's revenue growth over the previous several years, looking at its profit margins, looking at returns on invested capital, and I'll share with you my proprietary discounted cash flow valuation for New Holdings, and I'll look at valuation measuring on a forward price to earnings basis as well. I'll do all that and then answer if I think New Holdings stock is a buy at its current price.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
New Holdings, like many companies, has been experiencing decelerating revenue growth in the last 3 years. The reason most companies are experiencing decelerating revenue growth primarily stems from central banks worldwide raising interest rates to combat inflation, and that higher cost of capital put restraints on growth-oriented businesses like New Holdings. In response to the higher costs of capital, New Holdings made a strategic decision to go after more profitable growth customers instead of just going after customers. That distinction is important because it slows down growth. When businesses see that interest rates are close to zero and they can borrow money at very low cost, they facilitate more strategies for expansion. And the opposite is true when interest rates are rising. So New Holdings, still very nice growth here, 25% in the most recent quarter. The opportunity to continue expanding is there because of how many people are underbanked in Latin America. And then on top of that, the region is growing faster than most other economies. The downsides are that the region is more volatile than most economies. And should there be an economic slowdown, should there be a sharp recession, there could be a significant number of people that default on the loans that New Holdings has on its portfolio. I mentioned that they've been focusing on more profitable growth, and you can see that in their numbers. The cash flow from operations to sales soared in 2022 and 2023 and is now holding steady at around 29%. That's a solid number of cash flow from operations to sales, especially for a company that's still growing revenue north of 20%. I see a similar trend line for its return on invested capital. At 25%, it jumped from negative 5% in 2022, and given the management team's focus on more profitable growth, I wouldn't be surprised if the company's returns on invested capital continue rising over these next several quarters or over these next several years, of course with the asterisk that we don't see a sharp economic downturn in that time. If there should be a sharp economic downturn, New Holdings is exposed to that more so than most businesses. Remains to be seen how badly it'll be impacted during a recession. We don't have enough data going back enough years for New Holdings to determine how the company reacted to previous recessions, to previous economic downturns. But we can make the conclusion from other financial services companies that held the types of loans and served the types of customers that New Holdings serves, that it's going to be an inverse relationship, or I should say, it's going to be a direct relationship where if there is an economic downturn, it's going to be bad news for New Holdings. New Holdings will also experience a downturn. So now let's look at valuation. When I calculated my intrinsic value calculation for New Holdings, I came to the conclusion that the intrinsic value per share is around $20. That compares well to the current market price of $10.43. New Holdings has a cost of capital of 12.73%, a cost of debt of 8.5%. But despite those relatively higher levels of costs of capital, the company's present value of its cash flows, I expect it will earn between now and the very long run, still outweigh the current market price, almost double the current market price. So the shares look undervalued when the market price is around $10. When measuring this company on the forward price to earnings basis, I come to a similar conclusion. It's trading at a forward PE of 13, which is what you would see for a less attractive business. Not what you would see typically for a business that's growing revenue at 20%, that has cash flow from operations that are almost 30%, that has a return on invested capital at 25% and growing. You typically don't see that in this kind of a business. But the reason why you're getting to see this at this lower valuation is because of those increasing risks about its loan portfolio and how it will perform if there should be a sharp economic downturn. They've already experienced some increases in their default rates in their loan portfolio, even though the economic situation has not deteriorated all that much. And if there should be a broader deterioration, that could spell bad news. So the risks are the reason why New Holdings right now is trading at such a low valuation. So in my opinion, the risks have already been incorporated into the price. So the price is selling at a valuation that accounts for the risk. So if you're thinking about buying it today, you're getting the stock with the price lowered as a result of the risk. So I think it's a good situation for long-term investors. I think the risk versus reward is worthwhile, and I would say this stock is a buy. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.